All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing that I want to talk about is Dogecoin drops in price as Elon Musk is potentially going to be investigated by the SEC over all of his tweeting that he's been doing lately about cryptocurrencies. And this isn't particularly surprising because Elon Musk has been investigated by the SEC before when he was tweeting about how many Teslas they actually were producing, which is not really cool for the rest of the Tesla company, because that means that people were buying or shorting stocks based on what he is tweeting, which is not good for his company at the time. Now, we're also going to talk about how the price of Bitcoin is sort of slipping a little bit along with the market, like the stock markets as well. But first, things aren't looking so great this afternoon for Dogecoin, with rumors swirling that the SEC is going to be investigating Elon Musk over his public support of Doge. So the quick recap is basically Elon Musk, the CEO of Tesla and SpaceX, he's been tweeting a whole lot about the cryptocurrency Dogecoin and Bitcoin as well. For example, when Bitcoin was around $30,000, it was like $33,000 or $34,000. Elon Musk tweets about Bitcoin. It immediately goes up to $38,000, $39,000 and then slowly goes down from there. Then he starts on his Dogecoin rants and tirades and tweets, if you want to call it. And Dogecoin all of a sudden goes up to 8.8 cents. Now, that wasn't entirely because of Elon Musk. There was also a Satoshi Bet subreddit that was just absolutely shilling and pumping Dogecoin for whatever reason to try to get it to $1 or 10 cents or whatever. And along with that, we had Gene Simmons and Snoop Dogg also tweeting about Doge, which also helped the price. And then at some point, Elon Musk said, yeah, I believe that maybe Bitcoin and Dogecoin are a little overpriced right now. It seems like the price is a little bit high. And then all of a sudden, the price goes back down. So it's not particularly crazy that the SEC is going to be investigating Elon Musk, because he is indeed, at least inadvertently, pumping and dumping the price of cryptocurrencies. This reminds me a lot of John McAfee, who used to be paid, it was like $105,000 or something like that per tweet, and then coins would hire him, and then he would tweet it, and then that coin would go through the roof. Now, I don't believe that Elon Musk is being paid to tweet these things, but since his company bought $1.5 billion in Bitcoin, once he starts tweeting about Bitcoin, at that point, it's a little bit of manipulation, even if it's inadvertent. So the Zero Hedge, a financial blog that rose to prominence in the wake of the 2008 crisis, tweeted today that the SEC is investigating Musk for his tweets on Dogecoin. The message from Zero Hedge simply cites sources familiar with the matter. So, for Elon Musk. Now, before we get to the next article, I want to talk about Bitcoin and how it's a little bit dumpy right now. We're at $47,000, which is still pretty crazy considering just a few months ago we were below 20,000. However, the reason that it's dumping is that the stock market is not doing particularly well right now. Bond yields are raising pretty quickly from the Federal Reserve. So you can basically buy bonds from the Federal Reserve, and they are guaranteed payouts over a period of 3 years or 5 years or 10 years. And when those go up, something like 1.5% or 2 or 3%, it's really, really enticing for investors, and they will sell their stocks and then buy into those bonds. Now, those yields don't seem too crazy, but when you're dealing with millions or billions of dollars, well, then it really starts to add up. And the idea is, well, I could put my money in the S&P 500 or something like that, or those companies, and I could have a chance for 5%. I could also get wrecked, potentially. Or I could put my money when the yields raise from the Federal Reserve into something like 3%, and that's borderline guaranteed. There's virtually zero risk in doing that unless the entirety of the United States collapsed in an apocalyptic depression or something like that, which is unlikely to happen. So when that happens, of course, people are starting to sell off their stocks. So just let me show you this. We have the S&P 500 all down today, down by 2.5%. The Nasdaq down 3.5%. The Dow down. Let's see, I have the 5-year on there. The Dow down nearly 2%. And I argue that Bitcoin has been correlated because we can see that same thing happening in the crypto world. Everything is basically down right now, and I want to show you guys this. We'll go to the 5-year chart, and this is when coronavirus was announced. This is when I believe that Bitcoin was relatively correlated with the stock market. Now, I don't believe that they're uncorrelated. For many years, it was believed that, okay, if there was a stock market crash, Bitcoin is going to do very, very well because it's not correlated. It has nothing to do with the stock market. It has nothing to do with real estate or anything like that. However, I think the more and more institutions, the more companies, the more Wall Street traders we get into cryptocurrency, of course it's going to be correlated because they're going to be using the same systems, the same bots, the same trading methods, the same buys and sells, everything like that. And of course it's natural to assume that they're going to use the same kind of methods in order to buy and sell, and at the same time as well. So this was March 2020 when the shutdowns from COVID started to occur. And you can see here a major dip in the Dow. We were at 29,000 points and then back down to like something like 19 or 18,000. And with Bitcoin, it was the same thing. And all you got to do is scroll into 2020 here, and you can see that same dip, the same exact dip. And if you look at the entirety of 2020, you could see that the major dips in the stock market correlate very well to the major dips in Bitcoin, whether they were slightly before or after. You can see when the stimulus started to come out, everything started to go back up, including Bitcoin. So it's quite correlated indeed. And if it wasn't correlated in any way, shape, or form, it's unlikely that there would have been a massive sell-off of Bitcoin. Now, you could argue people were selling Bitcoin to have money because they were getting fired. People were losing their jobs. The shutdowns were causing less income for people, so they would decide to sell their Bitcoin. But this is just one example. There are many. If you look throughout the year and you correlate it to the S&P 500 and Dow, etc., like that. So quite correlated indeed, and that's basically why where everything is kind of going down. Things seem overvalued, stocks seem overvalued, and bond yields are rising very quickly, which entices traders to take their money from the stock market and put it into bonds, which is a sort of a guaranteed thing, then take their money later when they feel that it's a good time to put it back in the stock market. But either way, Coinbase's financials are now public ahead of stock market listings. So Coinbase going public. So its form S1 has been published by the SEC, clearing the way for much anticipated direct listing on the NASDAQ. The move caps a 7-month effort by the exchange to go public, and rumors first emerged Coinbase was exploring a direct listing on a U.S. stock exchange last summer, though the company didn't confirm the news until December. And at the same time, the exchange only announced it had confidentially filed its Form S1 with the SEC. Coinbase didn't confirm it was looking to list its Class A shares directly until last month. So if you are also into stocks, Coinbase is likely a pretty good bet here. The publication of Coinbase's S1 provides the first public view of its financial performance and how it intends to use the funds it raises. And Coinbase, quite profitable indeed, particularly from the newbies who use Coinbase instead of Coinbase Pro and get charged a unbelievable amount of fees. But moving on to some Wall Street Bets news. GameStop just jumped 100%, and Wall Street Bets is ecstatic. So it's happening again. So GameStop is up again by a lot. Before market close on Wednesday, the video game retailer shared started to soar, and GME just closed at $91.71, up nearly 104% for the day. It's the highest stock has been since it fell back down to earth at the beginning of the month, following the unprecedented Reddit-fueled rally that sent it as high as $483 a share. Over the course of the afternoon, trading on the stock was halted twice. So it's not exactly clear what's happening here, but one group is celebrating, the Wall Street Bets Reddit. The community of retail investors is ecstatic at the results and hailing the jump as proof that the GME roller coaster ride isn't over yet. There's so much interest in the community. It just seems that It's currently buckling under the load of incoming traffic. You can see LOL 100%. Nice. Next stop is the moon. I'm not selling. So these people have been holding on to their GameStop regardless of it falling down to something like $40 from over $480. So a number of events this week may be contributing to the rise. For one, GME advocate Keith Gill, known online as Roaring Kitty or by one of his profane handle Deep effing value, testified last week in the House Financial Services Committee hearing, which was just glorious to watch. If you guys didn't watch that, it's all over YouTube, and it was sousy, in which he pleaded his case as an everyday investor who simply liked the stock. Late last week, Gill doubled down on his GME shares to 100,000 shares, worth at the time about $4 million. And Gill's willingness to double down on his GameStop enthusiasm could be one factor explaining the stock rise today, but it's certainly not the only one. GameStop's former CFO, Jim Bill, announced his resignation yesterday, a sudden departure. Insider Now reports may have been less amicable after the company's board of directors lost faith in the executive that could be fueling investor enthusiasm. So another interesting thing that Keith Gill mentioned during that House Financial Services Committee was there was basically some questions about the Reddit in the idea that, okay, this seems like a pump and dump group. This seems like this group got together to purposely pump this GameStop, which is kind of the right idea there. However, when it comes to the hedge funds and institutions, they have a massive amount of resources in order to do research for them. They reach out to others. They have huge communities and resources and researchers, investors that they can all reach out to and sort of communicate and say, yes, we're going to short this stock, or yes, we're going to pump this, or we're going to buy this, or we're going to sell this. And so that's the same thing. So some people were arguing that Wall Street Bets is essentially a pump and dump group, but really it's the first time that a community really got together and actually started talking about what stocks they want and what stocks they want to try to pump and what they want to do in terms of longing or shorting. And basically the House Financial Services Committee really liked Keith Gill, and his talk on it just basically convinced them that he was not the problem, or that Wall Street Bets was not the problem, but rather Robinhood and Melvin Capital, etc. So that was quite glorious indeed. Now moving on to some pretty big news. JP Morgan report endorses 1% allocation to Bitcoin as a hedge. So strategists at Wall Street banking giant JP Morgan have suggested that a 1% portfolio allocation to Bitcoin would serve as a hedge against fluctuations in traditional asset classes such as stocks, bonds, and commodities. So a small percentage allocation was advised to mitigate the risk of any large downturns in the digital assets value. Bitcoin has declined 20% since its all-time high of over 58,000 on February 21st, but it is up 60% since the beginning of this year. So JP Morgan all over the place saying Bitcoin's a fraud and then saying, oh, put 1% into your portfolio. But either way, there are a lot of major individuals that listen to JP Morgan, and if they say put 1% into your portfolio, there's going to be a lot of people that will probably do it. In a multi-asset portfolio, investors can likely add up to 1% of their allocation to cryptocurrencies in order to achieve any efficiency gain in the overall risk-adjusted returns of the portfolio. So speaking to CNBC on February 17th, ARK Investment Management's Kathy Wood observed that if all corporations were to put 10% of their cash into Bitcoin, it would add $200,000 to the asset's price, making it just a simple smooth $247,000. Not too big of a deal. But that's about all I have for you guys. Looking at CoinMarketCap, $47,600 Bitcoin, and we're sort of just still going down, down, down. I don't really expect this to return. As long as the stock market continues to go down, it's likely that Bitcoin is going to go down a little bit. So this was one of the only reasons that I said that Bitcoin would go down in price. Because I thoroughly believe that at this point, all of the institutions buying it, there can't really be too big of a dip. Now, we got to be used to those 20% dips in Bitcoin, but I mean something catastrophic, bringing it down to under $10,000 again or something like that. And really only two things could really do that. And I think one is a outright stock market crash. And we'll have to see what happens during that, because we haven't seen Bitcoin actually in a stock market crash, because it was made in 2009 at the beginning of the bull run, and we've been in a bull run for something like 12 years now. So it's really about time that all of the overpriced stocks see a correction, and we might see a depression or an outright crash in the stock market. So we'll have to see how Bitcoin will do. But for now, the dips in the stock market really correlate well to Bitcoin also, and $1,500 Ethereum. But again, that's all I have for you guys. Make sure you subscribe to the channel, like the video, share the video. That helps me out a lot. My social media in the description below. But as usual, I will see you guys next time.